Well, the situation in Greece tops up our business news now with Kate Moody. Hi, Kate.
Hi, Jeannie.
Now, Greece has been center stage all week. Finally, today, action. Tell us.
Exactly. We've seen, of course, this official request going in to the head of the Eurogroup. And in true 21st century fashion, it was confirmed on Twitter. The Dutch finance minister, who's also the head of that Eurogroup, tweeting that he had formally received the Greek request to extend their bailout loans for another 6 months, not 4 to 6, as we'd previously believed. This after the current agreement expires at the end of February. Now, we understand that Greece has agreed to honour all of its debts and have the extension overseen by the troika of international lenders. That's the IMF, European Central Bank and European Commission. The troika, of course, that the new government had earlier spurned and vowed not to deal with. Greek ministers say they want to achieve fiscal balance but won't accept any more austerity measures. So from their point of view, it's not really a renewal of the old bailout deal, but rather a new 6-month assistance package. The Eurozone's 19 finance ministers will meet to discuss the request in Brussels on Friday afternoon. And the Eurogroup is already saying that this request opens the door to compromise, Jeannie. So we could be seeing a good result from Athens on Friday.
All right, so there is a lot riding on this meeting tomorrow. How are the markets responding to all of this?
Well, the European markets opened the day in the red, a lot of skepticism about how this request would be received. We have seen the markets turning into positive territory now as details of that Greek request come out. You can see there the Athens Stock Exchange trading up over 2.5% there. The other markets also responding fairly well. Now, for more in-depth analysis of this, we can turn to Michael Ingram. He's a market strategist at BGC Partners in London. Mike, thanks so much for joining us. Walk us through how the markets are reacting.
Okay, you'd have to say throughout the sometimes turbulent negotiations between Greece and its creditors, markets have been incredibly relaxed about it all. We're seeing Euro stocks successively reaching fresh 7-year highs. And looking at European bond markets, you're seeing none of the contagion that we saw back in 2012. Portuguese, Spanish, Italian bonds all trading at very, very low yields against bunds. Basically the market seems to be taking a view that the prospect of a Greek exit from the Eurozone, or so-called Grexit, is very, very low, and even if that were realised, that situation could be very much contained.
So you think that the chances the Eurogroup and Greece will come to a deal, and perhaps more importantly that they'll reach a deal by their Friday deadline, you think those chances are pretty good?
Well, the market seems to think so. I mean, I think at the moment the market's thinking that Grexit is probably a 20% call. I'm rather more circumspect because, that Greece has asked for more cash is no surprise. We know that Greece needs cash, but in looking at what's come out today, there seems to be very little conditionality attached to this request for a loan. Certainly not the sort of increasing budget surpluses that the Troika is looking from the existing programme, and it's very unclear to me where the middle ground lies. I mean, ultimately, I think that Greece's government has a tri-lemma on its hands. On one hand, it wants to remain in government, it wants to keep Greece within the euro, and it also wants to deliver real economic relief to the Greek people. And I'm not sure they can get all three in the current situation.
What about the details that we've been hearing about this request? Does it seem that the Greek government is essentially capitulating to everything the Eurozone's been asking, or are they standing their ground a little bit?
Yeah, I don't think there's capitulation at all. I think one of the concessions, I suppose, is the IMF is still in the frame. I think that's something which perhaps is somewhat different. But, in terms of the commitments to, stay in fiscal balance, well, they were running a fiscal surplus before interest payments of 1.5% of GDP last year. So is it a relaxation on what they did last year? It's certainly not a tightening, which is what the programme demands, and a further tightening in 2016. So, again, I'm not convinced that there is real middle ground here. It would mean significant backtracking on austerity by Brussels, and that would send a very, very clear signal to governments and political parties elsewhere in Europe. And I don't think the Eurozone wants to go down that road at this point.
Mike Ingram of BGC Partners, thank you so much for joining us. We will, of course, be following this story throughout the day. We're just getting reports in now that Germany has rejected that Greek proposal as no substantial solution to the problems that are facing it. So that'll be developing throughout the day. Of course, we'll be following that for you on France 24. Now let's take a quick look at some of the day's other business headlines now. Samsung is entering the mobile payment game, buying the online wallet service Loop Pay. The terms of the deal were not disclosed, but Samsung says the app will work at 90% of stores that accept credit cards. It's a clear fighting move from Samsung as it looks to compete against Apple and its platform that allows users to do their shopping on their mobile phones. Nestle has reported its slowest annual sales growth since 2009 and warned that the year would remain tough. The world's biggest food manufacturer by sales said a slowdown in Europe and China would mean growth of just 5% this year, the low end of its forecast. Nestle did, though, post a 45% jump in net profit, though that boost came from selling part of its stake in the French cosmetics company L'Oréal. And Air France-KLM has seen its full-year profits drop after last year's pilot strike. The walk-off, which was the longest in 20 years, offset the benefits of lower oil prices. Europe's largest airline also said it was scaling back its investment plans by 600 million euros over the next 2 years. And that's it for this business roundup, Jeannie. But as I said, we will be following that Greek story as it develops throughout the day and the month. Really.
Thanks so much, Kate. Good to know you're on top of that story. It is a big one. Kate Moody from our business desk.